All right, good afternoon, Simple Futures. This is Neil, and it is Wednesday, Fed Day. The FOMC has spoken and gave the market exactly what it had priced in. And then the presser, where things didn't end so well. So, on the screen in front of you, this is the initial balance chart. Those yellow lines here mark the high and low of the first hour. What's significant here about this is that it went through the top, rolled over, and went through the bottom, and then ended at the extreme. In market profile terminology, this day type is known, if you go through the top and the bottom of the IB, it's known as a neutral day. And when you do neutral but then end on an extreme, that's known as neutral extreme. And that does have some implication. The implication is that you can expect a little bit of follow through. So, not exactly what I wanted, but certainly is what we got. With that, I was targeting 4100 in the ES up here, which is 4065 in the SPX. Really, that has to be, if to be true and correct, that has to be by next Friday, the 31st. That's the quarterly expiration. That's when the March 31 quarterly SPXs expire and go off the board. So that's the time frame associated with trying to get up there. But the immediate time frame with this right here says it could dip a little bit further before the chance to kind of fix this. So levels down here are 39, 39.50 and 39.30, same levels I gave you Monday when we were looking for support off of either 39.50 or 30, and then target 4100 ES, which is 4065 SPX. And so since then, what's happened is we reached up as high as 4075, but failed to the tune of 100 points all the way down here to 39.75. And so this being a neutral extreme says look for maybe a little bit of follow through, and then it's obviously anybody's guess, but mine is buy the dip and run these back up to targets that we'll be talking about next week. If we're fortunate, we're going to be talking about these targets next week because that's the read, and that is 4065 in the SPX, which is about 4100 in the ES, and we need to be there by next Friday. But not beyond. That's the thing. It could go up there close, but the read on this is not beyond because of that very large open interest on that SPX strike for that date, March 31st. They can target that, but it won't go beyond. So that's the idea here, and that's really all I got. I mean, it was really good today until about 2 o'clock Central, and everything changed. And I listened to the presser. I mean, I listened to Powell. I don't know what he said that was actually this bad, to be honest with you. I mean, I listened to everything he said. I don't know. Fact is, he said we're still raising rates, and I wouldn't look for any cuts this year. But Fed funds futures, the watch tool in the CME calls for additional hike, maybe one more time this year, and then pause. Well, that's not at odds with what he said. He said no cuts. A pause is not at odds with no cuts. So, I don't know. The dollar index looks weak. The commodity space looks like it's ready to bounce off a 200 period moving average on a weekly on the Goldman Sachs commodity index chart. Those are bullish. Those things are bullish. And I'm just looking for this thing, I guess, on this day type to have a little bit of follow through to a downside bounce and be on the northbound lane next week into those targets. That's it. That's what I got. Hopefully it helps, and let me know if you got any questions or thoughts on this, but that's where we're at. Take care. Good night.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me